You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
When you do need to get financing, how can an investor feel more secure, going out, putting in that firm offer, or do you suggest that? How do you work with them to say, these are the parameters, this is what you're qualified for, this is what you should be looking for, and then having that confidence that, you might take a day or two or three, because banks, we know, move slow. They're like cruise ships, right? It takes them a long time to turn around. So what kind of suggestions can you work with, or can you let some investors know? You're going out there and finding properties, you found that one, but now you have to get it under contract, and you don't want to put a financial or financing condition in there, because that might lose you the deal, right? So what's your advice?
Right. So again, and a great question, honestly. That's another tough one, because obviously as a mortgage specialist, we we are not allowed to go ahead and advise clients to go in firm, because then we're obviously liable for suit, right? But we understand the market that we're in, and especially in this, June, July, you put a financing condition on anything, especially if you're in a big metropolitan area, they're going to tell you to go kick rocks, right? They're not even going to look at your offer. So with that being said, if this is a route that as a buyer you are going down, I would say, and I would strongly advise, to make sure that you have submitted and provided your mortgage specialist or bank, if you're going to the bank, with all documents up front. Credit has been pulled. You have ironed out any questions, right? Because if something comes up last minute, let's say there's a $10,000 deposit in your account in the 90-day compliance, right? Most lenders, anything above $5,000, they're going to ask what it is for AML compliance. And if you can't come up for a reason that makes sense to them, well, they can back out the deal, and then there it is. You just lost your deposit potentially, right? That is the best way to protect yourself, I would say personally. That way, there are no issues, right?
I just want to go back because, I'd like to just explain the term compliance. So essentially what you're saying is they could go back and look at your statements for the last 90 days. And if there's anything that can't be explained, they might question it. So here's another scenario. And talking about compliance, let's just say you are gifted money and you are working with a lender that may not like gifted money. So maybe you have a conversation with your mortgage broker about putting that money in an account for 90 days so it can vest there. Are those conversations that you're having? Because I think that, and there's going to be some banks that are going to look back at different timelines or whatnot, but what is important to know about that topic?
Right. Great. Because I would personally say down payment compliance is probably the hardest part, right? Because naturally working with investors, there's money coming from everywhere. Money likes to be fundraised, crowdfunded, large gifts from aunts and uncles, right? Things of that nature. So in the perfect world, yeah, if you can have the money sitting there for 90 days, right? Then we don't even need to say it's a gift. We can just say it's your funds, right? As long as it makes sense. If you're an individual who's making $100K a year and you have about, let's say 60, 80K in a savings account, okay, that makes sense, right? Now, if it's like you make $100K a year, you have $1 million, then that's going to cause, some red flags. So it still needs to make sense. But anything past 90 days, in most cases, they're not going to ask at all. So as long as it's been there 90 days, you're good. Now, if obviously it's less than 90 days and they see 10,000 coming in, right? Or a large deposit coming in, then we can position as a gift. Now, where it's coming from, that's another thing. Naturally, they want to make sure it's from an immediate family member. Now, that's, again, subjective. Immediate. What does immediate mean? Is that cousin? Is that uncle? Is that grandma? Is that dad, brother, sister? Usually they want it within the immediate family. So brother, sister, dad, mom, grandparents, grandfather is pretty safe. Once you start getting to uncles and aunts, you're throwing it up in the air, right?
Yeah, and Charlie, you're doing this all day, every day. You're working with investors, and sometimes people that are listening to our podcast think we're crazy. People are going out there and buying properties every single day, and it's the first time, and it's a lot of paperwork, right? Like even with my business on the rent to own side, collecting all the documents for certain clients to check their financing, it's a lot of work and it can seem daunting. I want you to give some hope to some investors out there or would-be investors that, you know, this is kind of a normal process, whatever that normal is. But the documentation, the process, why these banks, why lenders are doing this, because obviously you're going and finding the best suitor, the best money for those investors. But what are some good, tell me a couple good stories about, you know, you've had some investors that have been successful, that have funded their deals, timelines have been tight, but, you know, you've come in and helped them out.
Right, and you hit again. That's a great question. The reason why the banks want to see documentation up front is because at the end of the day, they're in it for themselves, right? They want to make sure that their bottom line is secured, especially if they're loaning out 80% loan to value on an asset, because you're not going to find lending outside of real estate that's ever going to give you that much loan to value, right? So that's the first thing. Now, the best part about it is if you're able to go through that documentation process for the first time, not only are you building a relationship with that lender, but things come a little bit quicker after that. Because as a mortgage specialist, I save everything on my desktop or laptop, or wherever you're submitting these deals from. Once the lender sees your name a couple times, or even even the mortgage broker name, and they know that you always submit documents up front and make it very easy for the underwriter, it's a human too on the other end of the line. You make their job easier, they're going to make your life easier. You know, do you want, Charles, you always send me all documents up front. Let me just look through this very, very quickly for you. Approved, commitment. Here you go, right? But that often takes some time, right? To build that type of rapport with a specific underwriter or bank. But that is the benefit of providing those documents up front. Once or twice, I know it can be a little bit tedious, but after that, it definitely gets smoother.
Awesome. So I think, you know, in the beginning too, like you mentioned, you do some commercial, you do some residential,
Mm-hmm.
You know, give me an example or give us an example of like a unique way that you've structured maybe a more complex deal in the past.
Ooh, unique way. Let's see where I can pull this from.
Something different. I mean, I'm thinking along the lines of like a blanket mortgage or something different that we don't hear about every single day.
For sure. So this is actually a very cool trick that I feel like not a lot of people know about, but it will help investors, especially those who are doing JV deals, right? What happens is you have a JV partner, who may not be on paper the best. Maybe you are providing some of that down payment as well, all right? And we're talking about down payment compliance, how it can be a little bit hectic in terms of you don't know how to structure the gift. If they send you the money, it's the full down payment. That's obviously too easy, right? If you're dealing with an individual, I literally just came from doing this, who was providing the full down payment, right? And let's say they're also going to be on the mortgage, but you're also going to be on the mortgage as well to qualify. No need to take the money. They're not going to be on the mortgage, but they're providing you the down payment, all right? The best way to go about doing that is simply, wherever the down payment is being held, add your name to the account to make a joint account. Because when you pull those statements, it doesn't show a date, right? It just says your name on the statement that you're being pulled. That way, it shows that the money is actually yours as well. All right, so that is I don't hear that a lot in a lot of the real estate podcasts and things like that I've been listening to. So just to give you more detail on the deal, I had an investor who was purchasing a fourplex, all right, and he had a friend who was going to gift him the down payment, the full down payment for the fourplex, right? He was going at 10% down. It was going to be owner occupied, live in one unit, rent out the other 3, use market rents to qualify, right? But the deals, like they already went firm. I got on the deal pretty late. I cannot tell the friend to deposit money in the account and position as a gift because they have no blood relation, right? But the friend's account was relatively clean. There was no transactions coming in or anything like that. So all I did was, I'm like, do you know what? Would you be open to adding your friend to your bank account and make it a joint account? That way it satisfies down payment compliance, closing, take your friend off the account. And then that's how it was, right? And then Once you satisfy down payment compliance and on the lawyer's office, you can do all the transferring you want. The bank has already gave the green light in terms of down payment. So you can go ahead and pull it from whatever credit card, line of credit, financing institution you want to just pay the lawyers and advance the funds from there. So I would probably say that is, I have a few, but that is the most useful and actionable that I feel like a lot of people can use that I don't think about.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at thereiteclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.